Hey Griffin, really enjoyed the video on Dividend Aristocrats. I didn't even realize this was a thing. Thanks a lot and looking forward to a part 2. All right. Can you please do a part 2 of Dividend Aristocrats? I want to see some more of your picks. Just getting into dividend investing myself, building a portfolio, and the Aristocrat video was really helpful, so thank you. All right, well, obviously you guys want to see a part 2 of Dividend Aristocrats, so let's get right into it. Hey, what's going on everyone? I hope you're all having a fantastic day. My name's Griffin, and in today's video, we're gonna be re-exploring the topic of Canadian Dividend Aristocrats because following the last video that we made on Dividend Aristocrats, quite a few of you actually reached out or commented that you'd like to see a part 2, which frankly is a great idea because one single video on Dividend Aristocrats simply can't do this topic justice. In that last video, we covered a handful of really great options of companies that you can add to your portfolio for steady dividend income. However, in today's video, we're going to be further expanding our horizons and looking at a couple really great options of Canadian Dividend Aristocrats that are going to provide you with both share appreciation as well as increases in dividend distributions over time, which is basically the holy grail of dividend growth investing. By the way, here, if you missed my complete dad joke in the first Dividend Aristocrat video, basically just going over what a Dividend Aristocrat even is, well, not to worry, I'm gonna let you discover that joke by watching that video. However, just to summarize a bit here, a Dividend Aristocrat in Canada is a company that has been consistently raising their dividend distribution for a minimum of 5 consecutive years, as well as having a market cap of above $300 million at the year-end review of when Standard & Poor's conducts the audit for these indexes. But hey, who am I kidding? You probably already know everything there is to know about what makes a company a Dividend Aristocrat because once again, this is part 2 of this series here. And by the way, I'm probably going to be making a couple more in this Aristocrat series. So if that's of interest to you, make sure to leave a comment down in the description letting me know that a part 3 should be in the making. Now, just to recap though, currently in Canada, there's roughly 100 Dividend Aristocrats, give or take. However, on this channel and in this video, we're not interested in all the Dividend Aristocrats. We're interested in investing in companies that do follow a certain amount of criteria, starting with number 1, having healthy financials. This is really important for securities that we're going to be picking on this channel because we want long-term appreciation of both dividend payouts as well as share appreciation. Now, criteria number 2 is going to be a Dividend Aristocrat that has a dividend payout ratio of below 60%, following with dividend increases on a year-over-year basis, right around the 5 to 10% range. That's a healthy dividend increase. And then finally, we also want to invest in companies that have the potential for share appreciation over time. It's honestly quite the criteria, I know. However, lucky for you, I'm here to go through every single Dividend Aristocrat and pre-screen them so that I can condense my findings into these videos and save you time and energy. However, I do just want to put this out there that if you are interested in going through every single Dividend Aristocrat and doing your own research, then once again, I have made your life super easy by condensing every single one of them into a blog post. And you can actually, in this post, filter them by industry, market cap, a variety of indicators, and pretty much all the metrics and goodies that you would be after. So if that's of interest to you, link down in the description. And while I'm speaking about freebies here, if you want to receive your own copy of a stock market portfolio template that I made in Google Sheets, which automatically updates when you update the ticker symbols for your spreadsheet, then make sure to check out the link down below, which is going to bring you to a landing page where you'll have free access to this template. And everything about this template you can change to your liking. So if you want to add fields or add charts, it is completely up to you. So once again, down in the description if that's of interest to you. All right, so with all of that information out of the way, let's now dive right into the Dividend Aristocrat stock picks for this month. And as mentioned earlier on in the video, I really wanted to select a couple companies here that were in a variety of different industries than the stocks we covered in last video, so that if you do decide to move forward with the companies that we're speaking about, you can somewhat diversify your holdings, because it's really important that you have diversification in your portfolio and have between 15 to about 30 stocks on the top end in your portfolio so that you're not overly exposed to a handful of securities. Guys, it's really important that you just don't go and put all your eggs in in 2 or 3 stocks. Even though it might be tempting, this is really a beginner move to do. So make sure you diversify your holdings for anywhere between 15 to about 30 stocks in your portfolio. Okay, so the first Dividend Aristocrat on today's list actually operates in the communication sector, which really isn't a sector we've spoken about all that much on this channel as of now. However, this particular company operates in 3 main segments, being the Canadian broadband services, as well as American broadband services, and finally, the business information and communication technology services. But wait, hold up a sec here. I mean, what the heck is a broadband service, right? Well, put it this way. This company offers 4K TV, as well as pay-per-view, high-speed internet packages, telephone services, web hosting, and even some cloud hosting services. So basically just an overall communications company. The company I'm referring to here is Cogeco Communications Inc. I think that's how you pronounce the name, but nonetheless, the ticker symbol is CCA on the Toronto Stock Exchange, and the current price of one share is right around $105. And this company has some great financials and indicators for dividend growth investing, as we're about to look at right now. Straight off the bat, Cogeco has a market cap of $3.6 billion, and the company has seen some nice and steady growth over the past 5 years, with steady increases in both revenues and net income. This now leaves the company with a current earnings per share at right around 8.7 and a price to earnings ratio, so PE ratio, of 11.9, which in the communication sector in Canada is actually quite low. But the question now begs, why is Cogeco a good candidate for an aristocrat in today's video? Great question. Well, currently as it stands, Cogeco has a cash distribution of 58 cents per share on an annual basis, which translates into a dividend yield of right around 2.23%. And currently the company has a dividend payout ratio of only 24.98%, which indicates that the company has ample amounts of net income for future growth of operations, as well as dividend distribution increases over time. And get this, Cogeco has been raising their dividends on a consistent basis for 16 consecutive years. So basically, ever since I've been in 3rd grade playing Game Boy here, Cogeco investors have received a dividend increase every single year. Pretty great. Moving on now to the second Canadian Dividend Aristocrat on today's list. This is a company that if you're a resident of either Quebec or Ontario, I absolutely guarantee you that you've been a customer of theirs at least once or a couple times in your life. The company I'm speaking about here is Metro Incorporated, also known under the ticker symbol MRU on the Toronto Stock Exchange, which currently trades for right around $54, and the current EPS is 2.67 with a PE ratio of 20.20. Now, why am I including a boring old grocery chain on today's list? Well, if you haven't already figured it out, boring old companies tend to be good contenders for dividend aristocrats, and this company is a prime example. Well, you might not know this, but Metro is actually one of the largest grocery as well as pharmacy companies in Canada, with over 500 grocery stores operating under brands that you know, such as Metro, Metro Plus, Food Basics, Adonis, and Super C. And then they also operate over 650 pharmacies operating under brands that once again you know, such as Drug Basics, Brunet, and Jean Coutu. The thing is, with this type of company, regardless of the economic climate, people still need to eat and take care of themselves, so this puts Metro in a consumer defensive category and makes the stock relatively recession-proof, which at this point in time is definitely a plus. Now, what about Metro's financials make me confident as an investor? Well, this is a company that has seen consistent and steady growth in both revenues as well as net income over the past 5 years, and is also a company that has been consistently increasing their net assets on their balance sheet since 2015. In terms of Metro's dividends now, the company currently has a cash distribution of 20 cents per share, which currently translates into a dividend yield of right around 1.67%. But get this, the company has been raising their dividends every single year for 25 years. That's longer than I've been born. And finally, the company also has a relatively low dividend payout ratio as of right now, which currently sits at 28.87%. So once again, this is quite low and will allow the company future expansion of their operations, as well as increases in dividend payouts over the foreseeable future. All right, so with the first two dividend aristocrats out of the way, if you're currently enjoying the video as of right now, then make sure to give it a thumbs up. And with that said, let's dive right into the third and last dividend aristocrat on today's list. And this is actually a company that operates in the industrial sector and is a dealer and seller of heavy machinery for the Caterpillar brand, which you all know under the name CAT. The company in question sells and rents out heavy machinery to a variety of different industries, such as, for example, the forestry, petroleum, construction, and mining industries, and then also operates in a variety of different countries, such as, for example, Canada, the UK, Ireland, and South American countries. The company I'm referring to here is Finning International Incorporated, also known under the ticker symbol FTT on the Toronto Stock Exchange, and it currently trades for right around $22 per share. Bottom line, Finning International operates in a gigantic industry, and with the increases in amount of construction, especially in the real estate sectors in Canada, for example, there's only going to be an increase in demand for heavy machinery over the coming years. Now, FTT has actually seen somewhat of a pullback over the past 2 years in terms of share value. However, I believe that this is a positive for us dividend investors because you're essentially going to be getting in on cheap assets with a PB ratio of 1.76, and then you're also going to be receiving a better yield on cost moving forward, because I believe that this is a company that is currently undervalued, especially based on the fact that it has seen increased revenues as well as net income over the past couple of years. In terms of dividends, Finning International has seen steady increases in their dividend payouts over the past 18 years and currently has a dividend yield of right around 3.6% with a dividend payout ratio of only 54%, which is a bit higher than the two that we just looked at. However, this is still in the green for dividend payout ratios and allows the company future growth and expansion of their operations and of dividend payouts. All right, so with the three dividend aristocrat stock picks that we just looked at, what is your opinion on each one of them? And currently, what other stocks are on your radar? I'd love to know down in the comments. Let me know. And also, if you want to have a copy of a free stock market template, once again, down in the description. And also, if you want to check out my first video on dividend aristocrats and or learn more about ETF picks for 2020, then make sure to check out one of the videos that's overlaying right here. And once again, thanks a lot for watching. Your viewership and engagement is truly what makes this channel viable. So thank you. And on that note, I'll see you in the next video.